Good evening, everyone. A very warm welcome to you for attending tonight's webinar. And a quick intro of myself. My name is Richard, and I'm from Online Traders Club Singapore. We are the organizer for tonight's event, and a very warm welcome to everyone inside the webinar room, and also those who are watching us on YouTube Live. And for those friends watching us on YouTube Live, if you would like, you can come inside the webinar room so that you can also participate in the Q&A later on, because tonight, Jay, our speaker, is going to do some live market analysis, and you can also put in the kind of stock symbols that you would like to see from the US market. Okay, so without further ado, please let me start by introducing OTCS Online Traders Club. Okay, so OTCS stands for Online Traders Club Singapore. We are a non-profit society formed in 2005, and we are a community of traders and investors. Now, to me, OTCS stands for a place where we network, share, and learn, and we do it through a series of workshops, such as the one you're attending right now, courses, and our library. Now, for workshops and webinars, we aim to hold about 10 to 12 a year. It is normally free for our members, and but because of COVID, we have moved all our physical workshops entirely online. So instead of just being free for our members, we are making it free for everyone so that more can benefit. Okay, so these are some photos of the good old days before the COVID. All right, for courses, we are okay. This picture is taken in January. Wow, how time flies. Okay, where we had our annual market outlook seminar, and it was very well attended. And SGX and SocGen were our sponsor for the event. And for courses, we aim to have about 3 to 6 a year. Normally, also we hold in person. But since the COVID times, I think many courses have also moved online. So what normally we do is that we will go to do a group buy with the trainer so that we can bring the prices lower for our members to attend. So that's for courses. And for our library, we have about $6,000 worth of resources that our members can borrow. The titles of our resources can be found on our website if you are interested. But anyway, now it's COVID, so we won't be activating the physical library anytime soon. Okay. So again, OTCS is a place where we network, share, and learn, and we do it through a series of workshops, courses, and our library. And right now, we are doing everything online. Then the next question is how much, right? So the normal price is 120 Sing dollars a year. And normally when we meet in person, we also provide dinner. So if you, depending on how you look at it, this $120 basically is like you're buying your own dinner and the membership is free, or the other way around, depending on how you look at it. Okay, so, but the good news is for the time limited period only, the membership fee is only $60 a year. So that's like less than the price of a cup of Starbucks coffee a month, right? Okay, to find out more about how to join Online Traders Club Singapore, please go to our website, onlinetradersclub.org to find out. Anyway, that would only apply when we meet again in person. So meanwhile, everything is free. So enjoy it, okay? All right, so if you have not already joined our Telegram channel, please look for Online Traders Club in Telegram and join it, and you will be kept posted of our upcoming events. It is a channel, so it's not a chat, so it won't be noisy, don't worry. And for those of you who prefer to receive the notification by email, please go to onlinetradersclub.org and sign up for our mailing list there, and you'll receive it by email. And not forgetting that our club, during the times where we hold physical meetings, we are assisted by a team of good friends who join us, who help us behind the scenes, and they are our unsung heroes. And just want to give a shout out to them to appreciate them for helping us out. So thank you very much. You know who you are. Very importantly, the disclaimer. So, you are responsible for your own profits and losses. Speakers' opinion are their own and does not represent OTCS opinions. OTCS is office holders, associates, sponsors, and partners are not responsible nor liable for your losses. OTCS events are for educational purposes only and should not be construed as advice. If you are in doubt, please seek professional help. Okay, so with that out of the way, please allow me to share with you a little something that has always been on my mind, and that is that we have in front of us two paths to wealth. Okay, so the first path is the driver's path, and the second path is the passenger's path. So, what exactly do I mean by that? So the driver's path is where you DIY, do it yourself, where you are an active investor. You got to click the buttons, you got to analyze the chart, you probably have to take some courses or read some books or watch some YouTube videos to learn a certain method of investing or trading, and then you do it yourself, right? So you are behind the wheel. So some people like that. DFY is the passenger way of building your wealth, and that is the passive way. So DFY stands for done for you. So just like the picture, you sit in your first class aeroplane SIA seat, and then everything is served to you, right? So you just have to hop on to the vehicle, and then hopefully you got into a nice, good vehicle where the driver can get you from where you are to where your financial goal is to be. Okay, so that is done for you. All right. Of course, nobody works for free. There's a fee to be paid to the driver lah. Huh? So that's done for you. So between DIY and DFY, the driver path or the passenger path, do you have a preferred way? Or is there a better way between the two? So you don't have to answer me, but in your mind, I hope that you have come to some conclusion yourself. Okay. So for me personally, I feel that both ways are doable. In fact, do both. That's my personal opinion. All right. So tonight we are going to witness our speaker is going to share with us ideas about how to navigate the US market post-election, and also he's going to share with us how he DIY his trading. And if you're interested in how he does it, if you like what you see, perhaps you can also consider what is the special offer that we have gotten for you, our attendees for tonight's webinar. Okay, so tonight's method is DIY, where you can be behind the wheel if you like that method. All right. So there will also be a Q&A segment. Probably we'll keep it to the end of the segment of the sharing so that we can concentrate all the question asking there. But if our speaker Jay feels that it is appropriate to have Q&A in between, we can also do that. All right. So with that out of the way, I'd like to bring on board Jay. Let's welcome Jay to the stage.
Hello, hi
Yeah,
Richard.
hello, Jay. Wow.
Hello, hi everyone.
Hello. And you in your classical hairstyle. I really love your hairstyle. I think I told you many times already.
Yeah, trademark. This one is the trademark.
You have to put gel or not?
Have lah, of course.
Tonight I have to put a bit more. I can see your hair already jut out of the camera.
Oh,
Okay.
yeah, slightly taller.
Thank you. Thanks for accepting our invitation to share about on this topic about how to navigate the post-US election market. Also, later on, you'll also share with us how you do the DIY way of building your wealth. All right.
Yeah.
So, Jay, you look really young. If I don't mind me asking, how old are you?
I'm 33 next week.
33.
Yeah,
Wow.
33 next week.
Very young. You're almost one cycle younger than me. I feel so
Yeah.
old.
So actually today I feel very stressed because I look at all the veteran traders, because some of them like I think I see some familiar names, Raymond, Terry. Yeah, I know some of them. Yeah, so
Not to worry. Okay, so just be yourself. So
yeah.
at the age of 33, how long ago did you start your journey of trading? Maybe before you start, we'll just find out a bit more about you as a person. What age did you start?
22.
33 already so successful.
Wait, 33. So I started at 22. That time I was still studying lah. Then got interested in trading, investing. Back then, I didn't know what was the difference. So can say about 10.5 years ago, 10.5 years thereabouts.
Wow. At that age, I
Mm.
think I'm still chasing skirts, man. So you're really learning how to invest and trade. Wow, very good. I think I must send
Yeah.
my young son to you. 拜师,
No lah.
okay, so at 22, and
Mm.
what was it like to start at such a young age? Was it smooth
Mm.
sailing all the way, or you know?
Well, to say that it is smooth sailing, I think it's definitely a lie, lah. I mean, anyone that is in this room tonight, I believe, you are all experienced and veteran traders. Some of you are maybe just starting out, but to say that immediately in the first few months, in fact, first 1-2 years, you can just snap finger and become like a very profitable full-time trader. I think that is a dream state that everyone wants to have. And back then, I was one of the people who believe in this. I really believe in, like, wow, okay, this is a way, trading, investing. It's a way to get rich quick, to get me out of the rat race. I don't want to work. And yeah, and I was one of I mean, this was the biggest lure lah, that why I started trading and investing back then, about 10 years ago. So I suppose everyone started like this. Then as time goes by, right, then I realized actually not so straightforward. It's a lot of things that are not on the textbook. The things that I've read, I picked up my knowledge through internet, YouTube courses, books, and trying to assimilate all of them into one practice. Then I realized that either my temperament doesn't fit the methodology, or I'm undercapitalized, and then due to emotions, lack of experience, not knowing how to react, and things like that. These are usually the challenges and the stumbling block in the first few years lah. And this was something that personally I faced a lot in my first few years, all the way, I would say, only until about from 2011, 2010, 2011, all the way to 2014, 15. That's where I found more traction and more consistency lah. So yeah, this is basically how I started.
Well, you didn't give up after the first few years of trying. That's a long time,
Yeah, it's a long time, and many times I obviously I felt like giving up lah.
Do you blow up accounts before?
Yes. Notable losses. 2011 August, Genting Singapore. So back then that was one of the novice mistake. That time Genting was very hyped up. So it went from IPO of 30 cents, and then it shot up all the way to $2 plus. So that time the stock caught my attention, and reckless position sizing. Long story short, I blew up almost half the account, half of what I have lah back then as a student. So it was very, very painful lah. So that was 2011, 2015, the Black Monday, where Dow Jones dropped 1,000 points over the weekend. So today, right, in today's context, given that Dow Jones is near 30,000 point, 1,000 point fluctuation is like, oh, okay lah, it's a high percentage lah, but it's not like end of the world. But back then, when Dow Jones was like 16, 17,000, you drop 1,000 point, that's a lot. So yeah, that took a dent as well. And also 2013, Google trade. I was trading Google over earnings. Long story short, I blew about 5,000 overnight, 5,000 US dollar, and that's about 35% of my account. So yeah, countless of mistakes here and there, but these are the notable ones.
Wow. So you remember them so vividly.
Yes, will never forget. I will tell myself never to forget all this.
It's like losing you have your wounds, lose a finger here, lose a toe there, that you can tell people, right? So you started at 22, and then you went full time straight away, or how do you start your journey? Is it part time, or what?
So that time, I was at a crossroad lah, because I picked up trading in year 2 of my uni. So back then, I always have the impression that, wow, this can be the path. I don't have to work. Wow, check this out. That time, people were showing pictures of in a beachfront. You take a laptop, then you have a drink, and then you retire. That kind of very relaxed lifestyle. That's like a trader lifestyle. That's the picture that they want to imprint. And I was one of those people who fell for that, and I truly believe in that. So that was in year 2, and year 3, after my exams, then I was at a crossroad. Most of my friends went out to work, and I was telling myself like, I think I can give this a shot because I have tasted the potential. I made money. I just didn't know how to keep those money that I made because I had those big losses. But I do make money from the market, from trading, and I thought, hey, this is a potential line of business or choice that I can make. So I tell myself, okay, I didn't want to go and work. So I foolishly, now that I think back, if I would advise the me 10 years back, I would say, don't be stupid, go and work, So back then, what got me by in the first few years, right, was practically, I did everything I could to survive. I took up any job that I can find. I just refused to have a full-time work. So it's just, you can say, the elders will say, you backside EG lah, like I told you so, that kind of moment. So as a graduate, I didn't go for work, formal employment. So I took up delivery job. I sell computers during the weekend at those PC fairs, IT fairs, and everything that I can get my hands on, including tuition to see me through the first few years. And that really taught me something about about money, in the sense, most of the traders, they want to trade full time, but I think one thing is standing in their way, because there are a lot of so-called gurus or traders nowadays. They keep preaching you can do this with zero money down, you can have a freedom, have a financially free lifestyle with just a few $1,000s or $200, which I personally, I don't experience that, so I cannot say whether that's true or not, but at least it's not true for me. I realized that one of the first few stumbling blocks in my earlier trading journey, right, it's lack of capitalization. So how much money can we make if, let's say, your account is just like under 50,000? If everybody with a $50,000 account can trade for a living and earn like $200,000 a year, right, then who would want to work? Nobody will work already, right? Everyone will just stay home and trade, isn't it? So I really got to experience this by heart. That's why I say, if I were to give myself, the younger me, advice, right, I would say, don't be stupid, go and work, go and get up the capital, and the path will be easier after that. Yeah. So that this is basically the summary of what happened in my initial years.
Right. Then what is the aha moment after that? What is the breakthrough that allow you to trade as a full time, and then count it as a way to put food on the table?
First and foremost, I am very thankful and blessed to have family to support me, because honestly, I will never be able to do what I do if I didn't have the support of my family, my mom, my back then my girlfriend, and today is my wife So I've been with my wife since we are in JC. So it's about, today is about 16 years. So we've been through a lot of things and it's thanks to their support, right? And morally, as well as sometimes financially, I'm able to be stubborn enough to say, okay, I don't want to work. I just forge through, and it was like I tell myself, okay, I'm going to make this work, because you also can say face pride and ego, in a sense. I keep telling myself, no way I'm going to work. No way I'm going to work. I mean, foolishly lah. So, and so I said, no way I'm going to work. And I got to make trading work for me. So meanwhile, right, while I wasn't in a rush, I didn't need to, get rich quick. So I just tell myself, hey, just pick up this skill set, just learn it properly, do whatever you can on the sideline to survive first. And yeah, and thankfully, I walked through the whole 10 years. The first few years was very rough, and to where I am today. So the aha moment was, I mean, from a trading perspective, right, in more technical aspect of the trading, it's really to forget about all the textbook stuff that we are exposed to online. So initially, when I started, I believe, like everyone else, if you can recall back your journey, right, most of us started with what? Candlestick pattern, chart patterns. Then we draw tons of lines on the charts, and then we try to find confluence between the different indicators. And I thought that was trading, but there was a period that, come on, this is not going to work. So I strike off one by one, and I ask myself, like, very objectively, is this contributing to my decision factor? If it is not, then to hell with it, just throw it out the window. I'm not going to use it. So today my approach is radically different from how I started like a decade ago. Yeah, so that was the aha moment by focusing on the basics, on the foundation, and giving up all the other so-called all the chim stuff, all the advanced tools per se.
Right. I think some of us, when we first started, right, our chart is very crowded. So crowded with a lot of traffic light, then we cannot see the chart. Right? The chart is only like a small 10% of the screen, then the rest is filled with all kinds of traffic light. Okay, thanks a lot for sharing how you got started and also your journey. I would really, hope that of course, I can't do that. If I could turn back the clock, I also want to start young. But never mind. My son is 15, Sec 3, so I think I will send him to you. Okay. I've taken enough time for this chit chat. So maybe you could go ahead and take over the screen and share with us your slides today.
Okay. Let me share my screen right now. Okay, so you guys can see my screen, right? Yes. All right.
Yes.
So any one point in time, guys, if you have any questions, right, just type it into the chat, and we will be able to see your questions. And this is to address some of your Q&A later as well. Okay, so thank you once again, Richard, and the OTCS, Online Traders Club Singapore, for inviting me for this rounds of webinar series. And today, right, I'm going to share from what I see and how do we navigate the post US election market lah. All right. So once again, very good night. A very good night to all of you. And yeah, let's begin, shall we? Okay. Now, before I forget, I mean, on a side note, Richard's voice is very DJ-like. Do y'all realize so? Richard's voice is very DJ-esque. Initially, just not starting when you were doing the introduction.
I should go apply to be a part-time DJ.
Yeah, you got a very nice voice.
Oh, thank you.
Okay.
Yeah, I should be a DJ. Thanks. Go ahead.
Okay, great. So let's formally begin. And here is a brief introduction of what I do. And this is in my study room. In fact, I'm broadcasting right out of this 6-screen workstation that I have. And some of you guys may be thinking, wow, this crazy young man, why got so many screen one? In fact, I only use 4 lah. But that time when I was, assembling the computer, right, then I put 4. It's like not here, not there, leh. I might as well just do 6 lah. And once I go 6, I never go back anymore. Okay, so I will use 4 lah most of the time. The other 2 is for like social media drama. Yeah, just so you know lah. I mean, to be very upfront with you. And these 2 years, right, I also have been sharing some of the ideas and insights at with different brokers at Invest Fair, Traders Fair, with Share Investor, Investment Outlook, and things like that. So maybe some of you have met me before, and I can see some familiar names in the participants list tonight. So for those of you that knows me, hello, a very good night. Finally can see you all again after all this while. So yeah, so this is what I do. And as Richard mentioned, I'm also a trader, and I trade the US market. And being a self-explored trader, I wouldn't say self-taught lah. Nothing is self-taught. It's always have to learn from somewhere, learn from somebody, learn from books and all that. And I think Raymond tonight, yeah, I learned some things from him as well. Raymond Ninja. Okay, so yeah, so I trade the US stocks and options, and also from time to time when volatility is there, I will also look at futures for intraday trading. So this is just to give you an idea of what I trade lah. All right, and tonight, right, as Richard has mentioned, I will be sharing with you through the do-it-yourself kind of way. Okay, the do-it-yourself approach, and I will be revealing my offer at the end of this webinar. So this is yeah. So stay tuned for this. And now I would like to start off right by looking at the US market first. And since the whole title is about navigating the post US election market, so I think it's no surprise that Donald Trump he refuses to concede. So that is creating excess and extra volatility in the market. But I think a very good news that happened over here was the vaccine. So with the announce of the vaccine last week, I believe, last week by Pfizer, and then I think yesterday by Moderna. So all the stocks, right, that were beaten down in this COVID period, in the post-COVID drop, right? All the stocks that were beaten down, some of the stocks like the industrials, the hotels, cruise companies and all that, they were all very sideways. They didn't rally like the majority of the market. And the money, the quantitative easing measures from since the last 6 months ago, the Federal Reserve added about 3 trillion, so 3T. And I don't know how many zeros are there. I know billion there's like 90. Trillion, I lost count of the zero. So I just write 3 trillion. The Federal Reserve added 3 trillion to their balance sheet this year, which means they literally flooded the market with 3 trillion, and majority of all this money, right, went over to tech, and that led to a tech boom, a tech run that we have not seen for years. And tech has been outperforming the market since 2013. But this year, right, it is kind of crazy because if you look at where we started, right now the market, if you look at SPX, right, it is up about 10-ish, about 10% or so. But if you look at NASDAQ instead, NASDAQ, we are up about almost double, since the start of the year. So it is kind of crazy. It's really, really, phenomenal. Then as the vaccine news came out, right, what happened was there was a rotation. So this is something that I track very often as well, every week. So I will tend to see like, okay, which sector are outperforming, which sector are picking up in terms of their price performance, and which sector is like, a bit, a bit like loose steam, a bit no power already. And as of this 2 weeks, right, we are seeing the big caps, the traditional companies, the industrials, they are all rotating in, whereas tech is rotating out. So what are some of the things on my radar? Right now, I'm looking at XLY, or rather the discretionary sector. So there are pretty good counters, or pretty good stocks within this discretionary sector. We also have industrials. And the thing about these stocks, right, I like them is because they are not so sentiment driven. They are not so news centric. Because I know a lot of you that trade the US market, right, you are so lured towards all the big names like Tesla. What's the biggest news that happened to Tesla today, or rather yesterday? It's the inclusion into the S&P 500. It is slated to gap up at about 10%, more plus 10% later at 10:30 p.m. So those are the stocks that are very sentiment driven, which means that I want you to visualize this. It's like a balloon, right? And all the sentiment is like the amount of air in this balloon. And sentiment, right? Being humans, our sentiment can, sway from side to side in an instant. So something can be like overwhelmingly good, super good, and then you see the thing will inflate and will go, bigger and bigger. But it can also disappear in an instant. So this is the reason why personally I shy away from all this very sentiment driven stocks. So the stocks that usually I am trading, I don't like them to be on the news. If they are on the news too often, right, I don't feel comfortable because it is attracting a lot of retail traders, people who are chasing the movement to come in, and that will cause all the undue volatility, and it will cause the stock to go crazy. I like, for example, if I buy a stock, I like it to go up. Everyone likes a stock to go up, but I don't like the stock, the stock, right, to keep going up, like gap up every day. You plus like crazy amount of percentage, because that kind of parabolic movement is not going to last. And I believe this is something that a lot of the veteran traders here tonight can attest to. Stocks that run up crazy, usually they will fall very painfully as well. So this is the reason why we are looking, or rather myself and my traders, right, we are looking at discretionary stocks within the discretionary sector, stocks within the industrials. And these are the silent movers that you got no news, but the movement is strong. So case in point, right? We look at, for example, if you can see Nike, and we later on we'll go into more detailed analysis of these companies. All right. So industrials like what do we have? We have uh Caterpillar, we have Deere and Co, DE, we also have GE, General Electric. All this, right? They are going, they are like moving. Even Mosaic, consider under materials, they are moving silently without news, and these are the kind of stocks that I like lah. So it's not a whether is it good no good, but it's more of this is a personal style, because I was once very attracted, right, to those very sentiment driven stocks, and what it did for me, I didn't have a good experience lah. I mean, it was like, whoa, every day I was cheering, yay, go some more, then suddenly hey, what happened? Oh, then die, then cut loss, then out already. So that kind of stock is fun. It's very fun. It's very hyped up, and yeah, now I prefer to have consistency lah over this kind of fun lah. I find my fun somewhere else lah. So with this in concern, right, I always look at the key levels, and currently, right, the market is slated, the S&P 500 is slated to take out the all-time high. So sooner or later, I think maybe even tonight, tomorrow, maybe by this week, if nothing goes wrong, it is slated to take out this all-time high. And everyone's question will be, what is going to happen after the all-time high? So allow me, right, to share with you my framework called this TS square framework lah. So what is this TS square framework? So the TS square framework simply means I want to trade the strong stocks. So crudely as it is, it's just called the trade strong stocks, okay? The TS square framework. So now what does this TS square framework entails? So I will always, right, step number one, I always like like an area view, a big picture view, a bird's eye view of what's going on first. So at least I know, okay, there are some potential pitfalls in this area, some potential roadblocks in that area, then I will pay attention to all this. But if I was so zoom in, so focus on just the charts or just a single aspect, then I may miss out certain things that I should have been paying attention to. So step number one, right, I'm always looking at the big picture. I'm always looking at the big picture, like what entails in the big picture. Number one, the trend. I will ask myself questions about the trend. I will ask myself, like, are there any news which can be external? It can be good news, bad news. Like, for example, election news, the vaccination news. All these are news that will give or sway the sentiment. Because one thing I realize is, although there are fundamentalists who insist that the market rise or fall is due to whether the business is good or no good. No offense to that, but personally, my view is slightly different from that. My view is the market rise or fall because of future expectation. It's not because of the numbers. The numbers are there for like a safeguard lah. Like if this thing got to go up, right, the stock price got to go up. The fundamentals, yes, they play a part, but they don't play, everything. They are not everything. So case in point, if you look at Amazon, back then in 2013, I think the price was like only 200 plus. And from IPO, from when Amazon was IPO'd in, I think 1999 or something, then they got the dot-com bubble burst. So the stock price was under $10 for a point in time. And then all the way until 2013, it wasn't making money. So fundamentally, right, the company doesn't make sense. It's burning cash. It is not making money, but yet the stock price rose from like $10, $50, $100, and back then in 2013 is about 280. So that really baffles me, right? Like if everything is about fundamentals, if everything is about earnings, numbers, cash flow, then this company don't fit anything, but yet the price keep going up. So why is that so? So this is where I started to deviate from the very fundamentalist. So no offense if you are a pure believer of fundamentals. No offense to you. This is just my style, because my style, right? You can say that I'm a 70% technical. I'm more like 70% TA, and then 30% fundamentals lah. So I will be looking at, okay, whether the company making money, not making money, all this I will just have a glance at it lah. But at the end of the day, I derive a lot of information, and my decision is based on technicals, because the technicals tells me what am I supposed to be looking at, what price am I supposed to be looking at, what are some of the market participants action, what are they doing, are they, you know, like accumulating in a certain area, possibly distributing in a certain area. So I will couple that together with the volume as well to give me an implied picture lah. But of course, there is no 100%. At any one point in time, the market is always a best guess scenario. You know, a lot of people, when they look at a full picture, right, they can narrate a very nice story. You see, back then, this was the lowest point, and then what, and then where, and then it's like, so, and whenever you ask them, right, so what happened at this right age? What is going to happen? It depends. So it's like 有讲的你没有讲啦. So God say equal never say lah, right? So for me, I always am prepared to be wrong. So I always have a like, okay, this is what I think, and these are the key levels that support what I think. Should prices, you know, stay above a certain level, then my my so-called my idea is sustained. But if let's say it behaves otherwise, right, I'm not gonna argue and say no, I must be right. Whether I'm right or wrong, actually, it doesn't matter lah, because the market, right, is trillions of dollar. Is in fact, the daily transaction is billions of dollar. Who am I to dictate the or question the movement with my thousands of dollars, even hundreds of thousands of dollars? Still thousands. We still are having 5 zeros, 4 zeros, as compared to, you know, billions of dollars. So we are not in a position to determine the price lah. So in this, right, we are not the market maker, we are the price taker. Okay, so I always start with this big picture, and after I've done the big picture approach, right, I will then go and identify the key levels. I will then identify the key levels, which the key levels, right? You know, I know some of you use things like or tools like Fibonacci, you know, the pitchfork, the Guns, I think Guns diagram or something like that. But yeah, for me is I study them when I was studying for the CFTE exam, but I don't use them lah. And at the end of the day, my belief is this: whenever we are looking at prices, right, it's always about buying and selling. And it goes back to this very fundamental understanding of why does prices go up? Why do you want to buy a certain item or stock or thing today? Why do you want to buy something today? It's because you think that if I buy this thing tomorrow or sometime down the road, the price of this item will increase. That's why we buy. So we buy, it's because we think that moving forward price will be higher. So that's why buyers generally buy things lah. Then for sellers, right, why would they sell? So imagine this, right? If you have already bought something, why would you sell it at a certain price level? Is number one, because you feel that you have earned enough, or number two, you feel that moving forward, maybe in the next few days, the next few weeks, prices are not going to go up anymore. You think that, okay, this is currently at the one of the highest price that you think you can fetch, so you will sell. And that's why we sell things. So the key thing about my whole approach, right, is about identifying the key levels. So the key levels right now on the market that we are looking at, obviously, right, currently, just to give a little outlook, this is the all-time high. So the all-time high is over here. It's slightly above 3,600, and this is definitely a key resistance. And albeit I think it is going to break given the very strong bullish action that we have witnessed in the last 2 weeks due to the vaccination news. Everything seems to be positive. In fact, right, everything seems to be too positive. That's where I'm afraid, right? Because if you were to look across, right, if you were to look across over here, now we can say that this leg, it is a fresh breakout. So personally, and I don't know about you guys, but usually when I chase breakout, right, I need to get out like really, really fast. I don't have that kind of, I don't have that kind of fate or luck, you call it, right, that I can chase a breakout and the thing will shoot up all the way on. Usually, I chase a breakout. What happens is after that, the stock will go up a little bit and come back down already. So I don't really like to chase breakout. Between a breakout and a pullback, I prefer to get in on a pullback. because the risk to reward ratio is generally better, number one. And number two, right, it tells me this pullback, right, to a certain key level, it tells me the retest. It tells me the retest, and this retest means acceptance of a certain level. Like for example, if right now the market is at 3626, right, as of yesterday, so now this is a fresh breakout. It can go higher. I don't know where it's going to go later. Chances are it's going to go higher looking at the futures. So it can go slightly higher, and then this being the previous resistance, I would want to have a retest first. Okay, it may not nicely come back down all right to this decimal place lah. I don't think so lah. Market don't work this way. Every line is a zone, right? So as it bounces off here, then I know that, oh, okay, there are some form of buying, there are some form of buyers coming in at this price point, probably around slightly under 3,600. Therefore, it gives me that kind of conviction that okay, it seems that people are buying up here, and that's an area for me to launch in my swing trade lah. So for my trading, right, most of my duration is for a few days, few weeks, and obviously this year, given the post crash, right, the trend has been very strong. So this year, obviously, it helped quite a fair bit. So yeah, this is the step 2 of the TS square framework that I use, which is to identify the key levels. So right now we are looking at 3,600, and how does it come back and retest this zone? Because I mean, it can chase, it can zoom all the way to 4,000 for God knows, right? It may just go one line up, straight up. I don't know, but I always prefer to wait, because what goes up will come back down. So this is my kind of something that I've learned in the last 10 years, because personally, being young and young and impatient, right? Yeah, rashful, and I tend to be those very impatient type. I like always, I want to go in, come on, I want to go in. Then yeah, and every time I chase a breakout, nothing good comes out of it. So I finally tell myself, okay, no, I'm not going to chase a breakout. Just wait for a retest. Concrete, it gives me the conviction. That's where I go in. So this is number 2 of the framework, the key levels. And then number 3, right? After getting the key levels, right, then I will be like, okay, identifying where do I enter and things like that. Then of course, I would also be looking at the sizing as well. Okay, I will also be looking at the sizing. So the key levels, number 3, right? Okay, sorry, before I go to the sizing, number 3 over here, it's always about the action. So now, I know some of you have, or rather most of you would have heard of this, like price action, and I think it's a very overused term. I think it's a very, very overused word. And the action part, I find, is too impulsive. Why? Because it means that, wow, it touches here, then straight away I buy already. So I prefer not to do that. I prefer to wait for the, like a confirm bounce. So the keyword here is to focus on the reaction. Okay, that means I see the action first, then I react, the reaction. Then finally, step number 4, I will then look at the sizing. I will calculate what's the size. And yeah, so the size, right, broken down into 2 you can break them down into different chunks, because as you are riding a trend, right, there is no one best price to buy I know in hindsight everyone will say, hi, yeah, I should have just bought in at 2,400 when S&P 500 was there. But hey, that's in hindsight. How do we know that this was the bottom? We wouldn't know. So we can scale in, we can buy in chunks, or some other trainers, they call it tranches. So for me, it's just different chunks So it's about the size, and the size will obviously control the risk because over the years, I have been shaped by, like just now what Richard mentioned, right? I've been shaped by a few big losses. I know some of you, it may be a small amount to you but back then to me as a trader, given how much I have back then as a student, as a young 20 over years old guy, so it was very painful. It was very painful because the step to build up the account, right, was always long and torturous. And one misstep, when you oversize, when you take on, like for example, case in point, my Google earnings trade in 2013, I lost 4,800 USD over one night. back then, mine account was 16,000. It was a very small account. Rather, not say very small. It was a reasonable size account back then for me. And I built it up. Okay. I took so long to build it up to there to get to 16,000, and suddenly one trade, bam. It's like, if you watch Avengers, right? It's like Thanos, snap finger, and then after that, hey, the money is gone. So this risk, right? In layman terms, I always ask myself, can I afford this loss? Can I afford this loss? Because if, let's say I see this trade, wow, it's brilliant, it's beautiful, it's perfect, and then I see, wow, if I take stop loss there, it's gonna cost me X amount. Then to make sense, then what will I do? I would choose to walk away. The me today will choose to walk away, because if I'm a firm believer of this Chinese saying, 勉强是没有幸福的, meaning if you force it, right? If you force it, you will never get happiness out of it. So I always tell myself today, hey, if it's too big to stomach that kind of loss, if I cannot afford that, forget it. I just take a very small size, that's it. Not to earn money, is just to trade, number one, or I just walk away at all. Okay, so this is the four the four steps in this TS square framework. So if everyone is okay with this, right? If you have no question, then I'm gonna just move on. All right. So if you have any questions about this framework, right, just type it in the chat. Richard and myself will be able to see, and we will use some of the questions. If it is sensitive question, I will address it right on the spot right now. If it's not time sensitive, then later on in the Q&A section, then I will do the address. All right. So all good. Yes. Can
Yes. Please continue. After your sip of water. You have a big cup.
Yeah. 1.5 liter.
Okay. Yeah, please continue.
Okay, so this is the big picture, and today, right, specifically, I'm gonna zoom in. To one of the step, which is key level. Okay, I'm gonna share with you, right, my TA framework, and how do I use this TA framework. One of the things I use in the TA framework to identify the key levels, and it has worked. For me, it has worked brilliantly. And this is something that I hope to be able to contribute to create value to you. And I know many of you tonight are veteran traders. In fact, you may even like scoff at, 10 years only. I traded like 20, 30 years already. Yeah, so so just let me share my perspective, and hopefully it can add to some of your arsenal or weapon. All right. So so this is the framework that I wanted to share, and it's about telling turning points. So what are these turning points? The turning points, right, is part of identifying the key levels. Okay, so for example, right, if I were to show you these two random spots on this random price circles on the chart, right, the big question will be, Jay, why do you circle up these two areas? What has they got to do with each other? Are they even related? So if you look at it at a blank chart, right, obviously you may be thinking, okay, so I don't think they have nothing. I think they have nothing to do with each other. But once you can find their connection, okay, once you can find a connection between, let's say, area 1 and area 2, then you will start to see a magic, and rather not magic, you will start to realize that, oh, so it's like that. These are things that I'm not seeing. Okay. So for my own framework, right, personally, my TA framework, I don't use all the complicated stuff and all that, because I believe that simplicity is good lah. Okay. I'm someone that likes simplicity, something that is effective in telling me the story, because so many times, right, in the starting years, I plow on so many drawings, I put here, put there, put until sometimes I look back at my old drawings, right? I'm like, what was I looking at? What am I identifying? Where's a good price to buy? I can't even answer any of these questions, So that would render any form of drawing useless. So my TA framework that I use, right, I always look at support and resistance, which is obviously this is something that is bread and butter to every trader, I believe. Then I will be looking at trend line. So / okay, trend line. And the third thing I'll be looking for is pivot. Okay, the third thing I'll be looking for is pivot. So I combine, right, these three tools that I use. Personally, I don't use that much of like Fibonacci and things like that. I've studied them for the exam, but apart from that, I don't use it in my own decision making process. So what I do is support resistance, trend line, pivot. And today, right, I want to share with you how do I use this trend line to project the turning points. Again, to give the right expectation. Is it 100%? Well, guys, is it 100%? Never lah. Nothing is 100%. The only thing 100%, right, is the savings in your bank lah. So that one is guaranteed lah, right? Nothing else is 100%. It's always a best guess measure. And if I were to go back, right, remember this, the big picture, key level. After that, right, what we do is wait for reaction. So key level literally tells us, where am I going to be looking at? Roughly, where am I seeing? Then I wait for the next step, which, so now I'm supposed to wait for a certain thing, right? Has it happened or not? So that's where we use this framework, and it's not 100%. We have to say, okay, I am looking at this area. So has the price, behave in the way that I want to in this area? If it does, right, then it gives me the conviction to say, okay, I think it's turning. So I'm going to prepare myself for a certain trade. Okay, so get a perspective. So this perspective is, I find getting the perspective right is very important because initially when you want to learn something, right, it's always good to get the right perspective. Then we can go and consider like really how to use it. Okay, so this perspective, right, today I want to share with you is the using trend line. Okay, using trend line, specifically the trend line to project the turning point, because these 2 points, number 1 and number 2, they are linked together by the trend line. So as you can see on the chart right here. So you also notice, right, the way that I draw my trend line is slightly different. I know some of you have got trend lines that are, like this, then later one, you have one like that, then you have another one here, then you have another one like this. So I find that if you have varying degree, right, it's like martial art like that, like Wing Chun hitting the wooden dummy like that. So for me, is I make use of the angle, and why I use the angle is because of this concept, the mathematical concept called linear regression. So everything that has there is a rate of appreciation and rate of depreciation, and generally it's going to go in a certain band, a certain angle. So first and foremost, right, it is to identify this angle and then use the angle to apply it to the current price and project possibly where the next turning point will be. Okay, so in a nutshell, this is give you an overview. This is what or how I use my trend line. So first and foremost, right, let's go and revisit back to basics. What does trend line tells us? Okay, what does trend line tell us? Number 1, right, it tells us the speed. It tells us the speed. Speed of what? The speed of price change. It literally tells us the speed of price change, how fast or how slow the price changes. So this is what trend line tells us, the first thing. And the second thing, right, the tell us the speed, right? How do we know how fast or slow? In cars, when you're driving, it's measured in kilometers per hour. But in terms of trend line, in terms of price, right, it is always measured in form of angle. It's always the angle. So understanding this, right, I'm also able to use the angle to briefly, or rather to warn myself that, hey, a movement seems to be parabolic right now, and there is a good chance that this movement will not be able to sustain, and therefore prices may crash thereafter. All right, so this is what the trend line tells us. Number 1, speed. Number 2, angle. So applying the understanding of angle, right, we always look towards it from a best fit angle point of view. Okay, the best fit angle, we always look towards that. That means we don't have to use protractor or ruler lah. Just visually look through, right? You can see that the chart can be divided into 3 sections. So we call this section 1, section 2, and then section 3. Do you see that in section 1, this 10 degrees, this seems to be the best fit angle in section 1. And then in section 2 over here, right, it's about 29. So let us just round up to 30 degrees, all right? So first part is 10 degree, second part is 30 degree, and then in section 3, before that crash, it's 63 degrees. So round it down to 60 lah. So what do you observe right here between the different sections, section 1, 2, and 3? 1 to 2, the increase is about 3 times. 2 to 3, the increase, it's about twice. Okay, it's about 2 times. All in all, the increment is 6 times. And guess what? The time period, do you realize that each time, each leg, it's getting shorter and shorter? Do you realize that? It's getting shorter and shorter. So as the trend goes steeper and steeper, the angle goes steeper and steeper, it is only, natural that the angle, okay, it's only natural that the angle, the trend is not able to sustain for equal long period of time. So let's just use an analogy. I'm sure some of you have, gone for long distance run before. You have gone for some form of running before, okay? So imagine you picked up speed. You're actually running at a very comfortable pace, okay? And then suddenly you just go faster. How fast can you last? I mean, there's a chance that you're going to last half as long as what you did at a slower speed, right? So this is exactly what happens. From a slower speed to a faster speed, the time is shorter, and even faster speed, the time is even shorter. So whenever you see this in sector 3, okay, in sector 3, guys, what would be your initial or your immediate reaction? What would you want to do? How many of you say buy more? And how many of you say short? Yeah, so you both also not so ideal. Why? You buy more, suddenly tank die. Okay, you go and short, also die because you don't know how far the thing can go. So one of the things that I never do, it is to go against the trend because the trend, right, the reason why is it going up, number one, the optimism is at the highest. Number two, there is money flowing into this this security, this market, or this sector or stock. Okay, there is obviously money flowing in than flowing out. So if I want to short this, what am I actually doing? I'm taking my thousands of dollars, throwing it to a rolling freight train of billions of dollars that is charging up. And I just take thousands trying to throw at it, hoping that it will stop. So that is as good as, throwing the money away. So I will never short a strong trend like this. Yes, in your mind, you may think that there is no reason the market can go so high. Okay, that's perfectly fine, but we also must wait for a confirmation. We also must wait for confirmation that seems that this billion freight train seems to be slowing down. Then that's where you want to chip in your thousands. You throw, then that's fine. So in layman term, practically this is what I see in the raw form. This is what I see the market doing. So whenever I see a trend, right, that has the gradient increasing few times, like 2 times, then another 2 times, right, I'll be very wary. Will I short it? No. I will then couple it with market breadth. Okay, I will couple it with market breadth. I will also couple it together with my discretionary turning points. That means using the framework of TA, the support resistance, the trend line, the pivots. So I would put them into context, right, and say, hey, okay, seems the trend is, increasing and increasing at an unsustainable angle. Then if let's say the market is overstretched and it already hit a key level that I predetermined, that's where, right, I will wait for a reaction to ready to short. So it's a lot more passive than you think. It's not like those aggressive ones. Wow, I see, okay, this is going to happen. Then I put my money in front first. I never like to put my money in front first. I like to put my money last. Okay, when I see something, okay, I earn lesser. It's okay. As long as I don't lose more, I am more consistent. I think that's okay. So this is my style. Okay, a bit kiasi. So this is how I make use of the trend angle to tell an unsustainable trend, and especially right if let's say you see the volume picking up, or when the last leg you see the very low volume, that's also a sign lah. Okay, and especially if the thing is running right, then you see higher and higher, and then even higher volume. That's where this is a typical volume finale that it can tell us that okay, if it breaks, means that's it already. You are putting in more and more energy to push yourself up there, and once you finish it, then that's it lah. What will you do? You just stop more. So stop means drop down lah. All right. So this is how I make use of the angle to tell me whether okay, this trend seems to be unsustainable. So what am I going to do? And how I couple it together with the volume to give me that message lah. So I don't draw trend lines like this with varying angles, because I find that they tell me a very very different story, a very different story altogether. So now it tells me a very different story altogether, and I find that it's very distracting. Like, okay, so when it comes here like that, like for example Tesla, right? I know that Tesla, the price right now is in a very huge triangle. Okay, it's in a huge triangle. So where is it gonna go? Obviously now today it broke out already lah. So due to what? Due to the inclusion in S&P 500. So in this like I don't draw trend line like this. Instead, right, I draw trend line using a set of angles. So the key over here, and I think having talked for so long, this is the chart that, or rather this is a slide that you are interested in. Okay. So now, right, I am looking at I'm looking at the for this chart over here. By the way, this chart already expired already. Why I say expired? Because this used to be obtained from TD Ameritrade, and it's profit chart. Right now, they no longer have the profit charts on TD Ameritrade. So this chart is an ancient already. Now everyone uses TradingView, including myself. So what I do, step number one, right, is to find the accepted angle of attack. So since I keep stressing on the angle, then finding the main angle, okay, the major angle or the main angle, it's important. So I don't want you to look at it like, wow, some rocket science like that. It's a mix of science and art lah. So in this sense, right, it's about literally visually identifying, is there like a best fit line do you see in this trend, right? So we can clearly see that, hey, if I draw one line across, this seems to be the trend line, right? This seems to be the angle. So to give you a few tips on this accepted angle, right, what I mean by this is, number one, right, it must have, the prices must have tested many times. So it must test many times, and the prices must more or less respect, okay, it must more or less respect the lines. So in this sense, right, I would then do a trial and error. Okay, so now let me just narrate this process first, because later we'll go to the case study, then I will do the live analysis for you to see. So in this sense, I determine that, okay, this is the accepted angle. Why? Because number one, did the price test many times? I believe it did. Like over here, you can see it got rejected. Then that was in December. 4 months later, approaching that, rejected again. 6 months later, rejected again and again and again and again and again. So seeing the countless rejection over here, I then assume, okay, this is the accepted angle. Then what I do, I will just clone the lines onto other swing points. Now, what are all the swing points? Meaning points like, okay, if I take the same angle, I fix it down to this line, will it project anything? And I think now y'all are starting to see this picture. It will project the various turning points moving forward. Because if I were to do this, you can see that this was in August. Few months later, about 1.5 months later, in October, it projected the bottom as well. Does it come down to do a very, a flat retest? It doesn't. So this is just like, our housing prices lah. Okay, there are ups, there are downs, but they will never be flat. Okay, they will never be flat. So asset class prices, as long as there's overall money being pumped into the system, there is liquidity, then there will be inflation of the asset class prices. So you can see that the angle connects the bottom together, and even after like 4 or 5 months later, it projected the bottom in February, and of course, this one, it pierces through, creating a new low. So later we will plot one line there as well. And moving forward, okay, years later, it projected a bottom again and again and again. So after I realized this, right, then I realized, can I explain why? Well, the closest concept that I can come to explaining this, right, it's the linear regression. This is the closest concept that I can come to explain this phenomenon. But in all honesty, if you ask me, Jay, why like that? I will scratch my head. I tell you, I also don't know because it just happened. No? So our job, right, as a trader, don't overthink lah. I know a lot of us, we have this need to be right. We always want to find out, hey, why this thing like that? Why that thing like that? For me, is I don't know why lah. I just need to know the how. So I know this is happening. Then how do I act on it? How do I make money from this? This is at least how I think lah. All right. So in this sense, you can see, okay. So I'll plot. I will then clone the line down again. So I shift it down. I clone down again. Then this is the new turning point. And then there is another one that is less obvious, I think cutting through over here, where it was a resistance, then support, then support resistance. So this one can't really see. Okay. So even if you don't put in this line, I think it's fine. But from here, right, what does it do? Is it tells us a story. So this is where the prices is right now. So back then when I captured this was 212.5. So moving up and moving down, where are the turning points? So this is literally what what my trend line tells me. So if I were to zoom in, right, if I were to zoom in on the chart right here, and if you can see my cursor, you can see that right now the price is at 212.5. If it goes up, where is the next turning point? The next turning point, it is going to be slightly north of 215. Why? Because prices are growing at this angle. Prices are growing at this angle. So I use this to project and say, okay, I don't think the very obvious horizontal support resistance have that much of a weightage, because one thing I realize is something that is very obvious in the market, they tend not to work that well. The very obvious level tends to be broken time and time again. So I'm making use of this less obvious angle to project where the turning point is, and often I find that it has an uncanny percentage of accuracy that I never see that it was there, then suddenly, oh, that's why the prices stop in that area. So 212, you bounce up, okay, slightly north of 215, maybe about 216. That's where it's the turning point. If it comes down, first level at 210 before this double bottom, then if it tanks down some more, that's where you can see a deeper decline, right? We'll bring it down to about, project it forward about 202.5. So this is how I gather the idea of, okay, how do I project the turning points? And this forms, right, the step number 2 of the TS square framework. So step number 1, big picture. Step number 2, the key levels. This is one of the ways to get the key levels. Then step number 3, the reaction of this level. Because right now I'm not looking into empty space. At least I know, okay, I'm looking at like, okay, to the bottom is 202, 210, 202. To the upside is 216, 217. So at least I know, I'm going to pay attention at these areas. I am not like, wow, every day I pay attention. I don't know what to see. Every cent I go and count. Then that will get you crazy, right? Yeah. So this is what I use. This is what I do to get the key levels, wait for reaction, and then after that, calculate the sizing, and then after that, you execute the trade. All right. So this is the approach to the trend line. And later on, when you're doing the case study, I think will be even more, will be even clearer. So when will this application not work? Okay, when will this application not work? Obviously, in a sideways market, okay, when you are looking and dealing with a sideways market, case in point, a lot of some of you, you may be currency trader. Forex pair, right, tends to be more choppy sideways. depending on obviously the pair that you're trading with. So for example, like Euro USD in the last 3 months or so, last 3 months, it has been in a tight range lah, okay, 1.16, 1.19 lah. So it's stuck in there, not exactly tight lah, 300 pips, but it's largely sideways. So if you're just plotting the trend line in this 3 months period, right, then you'll be a little counterintuitive because it's largely sideways, okay, so there is no trend. And number two, right, the trend cannot be parabolic lah. So if you were to apply this to Bitcoin, this is the best thing that I can find to illustrate parabolic lah. Of course, if you look at stocks right now, right, Neo, I think Neo is getting crazy as well. Neo, SE, Shopify, Shop, okay, all of this, they are all parabolic lah. So you want to apply this without a reference point, it's very tough. It suddenly just takes off. So for Bitcoin, my experience, it will just pump, and then after that down, then after that pump again, then down. Yeah, so this is what is happening on Bitcoin right now. Okay, so meanwhile, right, if you have any questions, any stock that you want me to see, that you want to do the analysis on, right, you can just type in the type it in the chat, okay? Because currently right now we will be shifting into case study. So any questions you have that you need me to address right now, just type it in the chat. I'll be looking at the chat, and then we will move forward lah. Okay, so case study first. Okay. All right. So over here, right? Over here, let me just load this. Okay, so you guys should be able to see, and by the way, that's the wallpaper, right? I have an interest in photography also lah, so I took that picture myself. In case you're looking at a wallpaper. Okay, so this is S&P 500. I always like to start with the S&P 500 first. Now, Richard, anything you want to add before I go and look at the S&P 500?
Nothing at the moment. Just that if any one of you have any stocks, US stocks that you are interested in, or ETF or indices or commodities, please type the symbol into the chat box so that after Jay have covered the S&P 500, and then we can move on to see what are the stocks that you are interested to look at. You know, so at least we can address what you like to look at or what you are looking at right now. All right, so Jay, please take it away with S&P 500.
Okay, so S&P 500, you can see these are my previous lines lah. So I mean, to be fair, I'm going to delete away all these lines. I'm going to delete away all these lines and do it right in front of you to show you that the concept that I shared with you. So let me just remove the drawings right now. So I will always start with the weekly. So this is trading view, and okay, so this is my on-screen marker. So I'm going to first and foremost change it to daily. I know a lot of us likes to do our analysis on daily, and for me, right, I find that if I just draw based on daily, then there is quite a fair bit of market noise lah. So I will always start from weekly first, then I move over to daily. So for trend line, I like to look at minimum, okay, minimum 5 years. That means I like to look at a long-term trend. The long-term trend tells me the rate of the growth, okay, the rate of growth in this market. So I like to look at minimum 5 years. So in this sense, right, I will start from the subprime. That was the previous market crash. That was in 2008, 2009. So that was the bottom of the previous market crash. Let me hide away the volume as well. So looking at this area, we can see that market generally rises up quite a fair bit. So I will use the trend line tool, and then I will drop one line across first. Okay, I will drop one line across. And this line is not like it's that line, it's the angle. So I will have to do a trial and error first. All right. So trial and error, including okay, I can first fix it to here, then I project forward like that, or should it be like this? You know, what kind of angle am I looking at? Which one seems to be better? And in that sense, right, in that sense, you can see that just now, before I shifted, it was like that. All right, it was at 20 degrees. So right now, after I shift, it seems to be making a lot more sense, isn't it? Why did I say so? Because if you look at this, right, the market was tested here as a form of support, then turn into resistance, multiple time, resistance, notably in 2018 January. So again, 2020 post the pre-COVID drop. So this line seems to have a lot of bearing towards the price action, and currently prices are getting jammed there, and recently just did a breakout. Is it going to retest? So I'm going to use this line now. So this is a justification for using this angle. All right, the justification of using this angle. Thereafter, what I do is I will just clone the line. So how do I clone the line so fast? You on TradingView, you just click Control, click and drag, then it comes out. So I would have this habit of changing into a dotted line. So I will not change anything about the angle. So the angle will remain there. I will just shift up and down to plot at other swing points. So where are the other swing points? Over here, the one on top over here. And I quite like this angle because if you look at this, right, it seems like there's a support, then getting resisted, then resisted, and every time it get resisted, it just slightly inches forward at this angle. So I kind of like that angle, so I'm going to use this, and after that clone more lines to the swing points. This is another one over here. So this one is okay as well. Why? Because you can see support, resistant, then some form of contention over here, resistant, then support, then it happens again over here. So this angle so far okay. So over here, then you pull down a little bit like this. Okay, so pretty much, right, these are the few angles. If anything, maybe I add another one in here, okay, before reaching the top. So if anything, I am looking at these main few lines lah, okay, these main few lines, and then I switch back to daily. So I switch back to daily, then I will have a much better picture right here. So as I suggest, right, the framework also includes having pivot points, also includes having support resistance. So for support resistance, if I were to look at just these 2 years, right, 2018, 19, and 20, right, horizontal line, I will identify the key ones lah. So I will not place it right at the top. Personally, I like to strike through in between in the range, because I believe the average price that was being bought is in between the range one. It's never at the top or never at the bottom one. All right, the average price, the highest transacted volume, where people have to defend their position will always be in between the range one. Okay, sometimes towards the bottom, it tells you a story. Sometimes towards the top, it tells you another story. Okay, so I change to a different color lah, so don't mix up things. So here is one level. Another level down, I would say, is about here. That's another level down. And beyond this, this is a smaller level. Okay, this is a smaller level right here. Anything beyond to the bottom that is below this 2600, I will ignore it already. Why? Because you can draw like a dozen lines over there but it's so far, it's not going to it's not going to give you any any story it's not going to imply anything So on S&P 500, again, I must stress please do not fake this analysis and as a buy sell advice please do not do that. It's purely from a sharing information and educational point of view. Please remember to do your own your own studies and make your own decision because it's your money. Okay, don't base your money on my decision. Okay, my money, my decision. Your money, your decision. Okay, so this one key. So after I've drawn all the lines, switch back over to the daily time frame, then more or less the story is completed in a sense. So what am I waiting for? What am I waiting for? So over here, you can see that recently, because of the COVID, okay, the vaccine, because of the vaccine, the market just thrust upwards and reach a euphoria, and then it came back down to do a retest. Do you see that? And before heading upwards again. So market is currently doing a retest. It have already retested this previous angle. And if anything, right, at the same angle, right at the tip, Okay, right at the tip, if you can see this, right? Right now, previously it got rejected. So currently it is there. Like today, it is, this was as of yesterday, it was there. So the rejection is going to happen there as well. So today, let's see where the market is going to go based on the futures. I think it's going to rally upwards lah. So it seems like it is going to hit upwards. So where is the next turning point? The next turning point that I'm looking out for will be, assuming this session goes like that, it will be somewhere around 3,700. So this is the next resistance, the next turning point. And this line, right? This line comes from years ago. You have seen how I plotted this, okay? And if it doesn't go up there, if let's say it does, it just break the all-time high. So this is the second scenario. Let me change it another color. If it just break this previous all-time high, then what happened is it's going to trigger a lot. Okay, so this area over here is going to trigger a lot of all the breakout orders. And where are the stop losses? The stop losses, I think 70% of the stop losses are in that area lah. So what happened is, chances are, if there is a breakout, okay, there is a breakout, I am watching for a false breakout and then a washout first. Okay, a washout, because the market don't usually just chong and chong and chong lah. Okay, it will chong and then after that it will wash out until, okay, then after it comes back up. This is usually how market behaves lah. It doesn't just go up in a straight line. All right, so these are the levels that I'm looking at. Right at the top it is 3,700 resistance. Then if it comes back down, the first level will be here as a form of support. If not, if it can crash through this shaded box, then I will be watching where all the stop level will be, because this run, right, ever since this bottom in the start of November, this run have been rather crazy lah. You can see runaway gap, runaway gap, runaway gap, gap and gap. So it is very sentiment driven. So not so much by fundamentals, but sentiment. So if it drop down, I cleared this level, which is at 3,550. So upside 3,700. And if it clears below 3,550, then I'm expecting the stops to be wiped out one by one. So this area should have some liquidity being absorbed. And then after that, we'll see how it goes. So I don't think, if anything, if let's say the this current bullish trend is going to be healthy, I don't think it should go below 3,400. So this is how I first identify the key level. So remember the framework number one, big picture. So that's the big picture that we have been talking about all night. Then number two, the key levels, using the method that I've shared with you tonight, which is using the trend line, the angle. So we identified that, okay, now the key level is 3,700 at the top, 3,500 at the bottom. And of course, intraday, can you use these? Yes, then you need to drill down to intraday and better be looking at the futures lah. So don't look at the index CFD and all that, because sometimes the price will be off a little bit. Best will be look at futures if you want to be trading intraday. So key levels, number three, right? Wait for a reaction at these key levels. Number four, calculate your size lah. Calculate your size, then you trigger. So this is the TS square framework. Okay, the TS square framework. And currently, this is what I'm looking at. If the market is going to be healthy, if the traditional bullish run is going to continue, which is usually started by the Thanksgiving period lah, then I'm watching for this level to act as base camp lah. So you imagine the market is like climbing up mountain lah. Then we have our base camp, then we set our base camp 1, base camp 2, base camp 3, that kind of thing. So if it comes back down, you don't want short return to normal, to return to zero ma. You will come down to the next camp, then we see from there lah. Okay, watch for reaction, then sizing. Okay, so this is S&P 500. Okay, this is S&P 500. Everyone okay? Clear with this this application? Yes? Okay, great. So we have seen some of the stocks right here. Okay, let me answer some of the question first. Like for example, John, am I focused on ETFs or individual stocks? I'm looking at individual stocks. As you can see on my screen right here, I have my strong stocks focus list, and I look at ETFs to give me an idea of how the overall sector is behaving. Okay, so this is to answer John's question. Do I include moving average as part of analyzing trend lines? For me, I make use of the framework that I use, the trend line, the support resistance, and the pivot points. I make use of these three. Yeah, but I don't have much technical indicators lah to use. Okay, so what stocks and ETFs am I focused now? Well, looking at those that are so-called rotating in, which is discretionary, and also the industrials. So these are the ones that I'm looking at. Okay, so we have seen a few requests for different stocks. Richard, which one shall we do?
Okay, you have done with S&P 500. I think of particular interest would be gold. I think gold should be interesting.
Okay, gold. Okay, so for gold, let's look at the futures. So gold, we'll look at futures. So the same analysis, guys. Let me zoom out. So let me zoom out. You can see, okay, so for futures, right, I don't really go like 10 years back, because futures tends to be more fast moving. Similar to Forex, I don't go 10 years back. I will identify the latest trend that makes sense visually. So in this case, we can see that 2018 onwards for gold, the exact same analysis currently is on an uptrend. Definitely, that time the level that we're looking at is 1350, because 1350, 1360, it has been stuck there for like many years, before it break out, consolidated, break out again, wash out, then break out again, and then so it just went crazy. So this is the trend, right? Looking at the big picture, okay, the big picture is definitely an uptrend. Gold is definitely an uptrend if we just look at the big picture. And with this in mind, right, where are the key levels? The key levels right now, the drawings are already there. So let me just share with you the drawings directly. You can see the method is exactly the same. You will never see more things on my chart. Usually when you look at my chart, it's just like that. So I have volume, I have volume, I have the trend line, support resistance, and over there. So what story do I make out in gold? Okay, so gold is in an uptrend, and as of August, right, for the last 3 months, it has been facing some downwards pressure. So you can see over here, downwards pressure again and again and again. It has respected this line for many months until finally it thrusts up, and then unable to hold, it tanked. So this tank, right, was out of nowhere. This was last week, and it was out of nowhere. So currently, right, what am I watching for? Personally, looking at this volume over here, and this consolidation seems to be not going anywhere. Personally, okay, this is just my opinion. Don't take my word for it and take a trade on this. So this is my own read on this, is that I am short-term bearish on gold. Personally, I'm short-term bearish on gold because the price action, the structure, number one, is going lower and lower and lower. And it's just going downwards. And it hit, this was the previous area whereby the price was distributed, so across the zone. And recently, right, you can see that it shot back up to this zone, unable to fulfill that liquidity, and then poof, all the way down. So you can say that, wow, this is because of COVID, okay lah, whatever reason lah. So I always find that, whatever reason they throw, just nice coincide at those level one. So I've grown sick and tired of the reasons that the media give lah. So at the end of the day now, my own personal take is I look at the levels, just look at the key levels. So looking at this volume, it is not particularly high. The price action is not actually that high. So as in, it's not strong. And I'm looking at how it reacts to this 1905. Because if it goes towards 1905, unable to break through, then because this was again, you can see the distribution level just came down. So unable to break through, then I know that this thing is going to come down. So am I going to short it like immediately? No. Ideally, what I'm waiting for is I tend to be more patient, like I say, having been burned so many times. I want to wait for this 1950. This gold trade was brilliant. Okay, I waited for this. I honestly waited for this. I waited very long for this. I waited almost 2-3 weeks for this one. So it shot up to 1950, and I was watching this. I was watching for 1950. So these drawings were all there beforehand already. So it didn't manage to go. What I didn't expect was that the whole session, Asian, European, and then to the US session, right? The whole thing tanked so much, $116 one day. That's what I didn't expect. But this was, I was waiting for the turning point there. It proved me right. So again, now I'm waiting for 1905. See what will happen. If it trickles up to 1905, unable to break through, then you get a strong leg down with a higher volume. Then I know this is definitely coming down, down to where the next level that I'm targeting is 1810. So this is my own game plan for gold, which I'm still waiting after this initial trade. Okay, so this is gold. Hopefully I've answered Liu's question. Now, what's next?
Yes, thank you very much.
Hmm.
Wow. Okay, let me see. Let me see. There is Pokey was asking for Amazon.
Okay. Amazon. Amazon is very good. Why I say Amazon very good? Because right, if we understand from a top-down approach, right, the market. So I always use this market. I think I use the top-down approach to break down the market. I always look at the market first. Then after that, I will look at the sectors. Then after that, I will look at the individual stocks or the industry, then the stocks. So currently the strong sectors, they are discretionary, which if you look at the ETF is XLY. You look at industrials is XLI. So discretionary has been strong largely the whole year because of COVID, because of e-commerce. And Amazon, right, representing about 20, I think now dropped to 22%. It used to be 25% weightage on the XLY. So meaning if Amazon goes down, XLY should go down. So currently, Amazon seems to be taking a backseat as the leader right now. So the key level, if I were to look at it, right, it's a little messy okay. So Amazon chart is a little messy. Let me just zoom out very quickly. As you can see, this is getting parabolic, like crazy parabolic. None of the trend this is one of the example that if I were to plot a trend line using, let's say, this angle, right, no matter what I do, it will never reach where it is right now. Okay, so this is a classic example of parabolic. And if I were to plot a trend line like this, it will not even reach the top. Okay, so in this case, what would I do? Well, let me just try it anyway. If I were to do this, you can see that the angle is actually quite nice because it has been sitting over here again, and again. So if I were to do this, let me see if I were to zoom out. If I were to zoom out like that, and then pretty much you can see, yes, it respects the price but currently a bit far-fetched because I don't know, go back down to where already so currently it's a little far-fetched. But using this same idea, right? Using the same idea. So let me change this line to purple color. Okay, so over here, these are the key levels I'm looking at right now. And this is Amazon high volume cluster over here. So because of earnings, this cluster volume is quite high as well. I never like consolidation cluster with high volume because usually consolidation, it should mean, I'm taking a break. So I'm taking a break means no action. But here is I'm taking a break yet. Wow, the action is like super one. So I don't really like this. It looks more like distribution than it is for another leg. After all, it have run up so high already. So speculative long, where would it make sense for you to go in? Well, anywhere along this region, it will make a little bit more sense. Never chase the breakout over here because if you're expecting this like that, then you need maybe COVID wave 3 lah, okay, or maybe the vaccine fail or something lah. So you need some external factor push lah. But fundamentally, I think they are way overvalued comparing to the amount of money they make as a company. The most profitable segment in their company, in Amazon, right, it is not the retail, it is Amazon Web Services, AWS. It's the division that single-handedly brought them back to black. Okay, they were in red for like 13, 14 years. So I will be looking at this level if it bounces up. But currently today, the pre-market is already at 3205, so it's already somewhere here. If anything, I think there are better candidates to choose from lah, honestly lah. So if anything, if it ever comes down to the area over here, which is somewhere about 3,100 or slightly lesser, that will get me interested to look at it. Then I will be interested to look at it, because if you look at the structure right now, it is in a consolidation, like lower low, lower high, higher low. So it's like heading towards a triangle lah, and Tesla seems to be exhibiting this as well lah. So if there's anything, right, look for other discretionary lah. Just let me sidetrack a bit lah. Look at this. Isn't this stronger? Isn't this nicer? Walmart is also discretionary. You look at Nike. Isn't this nicer? I mean, these are all the stocks that I'm looking at lah. So this is quite strong, right? HD not so nice lah. It seems like Amazon, isn't it? So Home Depot. If you're looking at Gap's, Gap Inc., this is strong as well. Macy's, this one, then forget it lah. This one is almost down already. Nothing already. So Walmart is very strong. So apart from Amazon, I would rather look at these lah, personally. Yeah. Okay, so
And for Nike, you mentioned Nike. I mean,
yes,
people buy Nike now in COVID. Is that price? I mean, how do you look at this?
Surprisingly, yeah, Nike, yeah. I don't know what has it got to do with COVID lah, but apparently they are very, very resilient through COVID. So they started the year here. COVID, it went down like with everyone. Then by the time it hits mid-year, right, it really just broke out in August. It's a new lease of life already. Everything just broke out like that. So Nike, if I were to look at the levels, let me zoom back down. Again, the trend line, change it to weekly first. So here is a classic case. You can see a few different angles. You will see one angle like that. You will see one angle like that, and then another one final angle. Like parabolic movement. So what I prefer to do is I choose a relevant angle. In this sense, it seems to be from 2017 onwards. So from 2017 onwards, this top over here seems to be reasonable. Let me try it down here. Okay, this angle seems to be fine. All right, that's too far at the bottom. So Nike right now, looking at here, if we were to go up some more, will be here. So Nike is a little far-fetched, as in it's getting a little high. And currently, right, if I were to put up the volume, even though you have got those very wild swing, right? Can you see this huge wild swing, this huge red candle here, huge red candle there? But relatively, if you look at the volume, right, it's not very high. It's not very high. So it's still exhibiting like a typical, that kind of consolidation kind of volume characteristics lah. So looking at this, right, fundamentally, if you ask me why, I don't know. Okay, I don't know why they are like flying so much. Nike, then their sister brand Converse, all this. The footwear division is the most profitable division in the whole business. I have been looking at this. I've been sharing this with my students as well, telling them, hey, look at Nike. This one is siao one. They just chong and chong. I don't know why one. It's literally like the slogan, just do it. So it just goes up. So the levels that I'm looking at is right now is a 13012. I want it to break above here, okay? A good break above here, and then do a retest first before I consider a profit region somewhere about here lah. And the reason why is because, again, if we look at the big picture, discretionary, Discretionary traditionally have a reason to rally towards the end of the year because of gifts, because of people tend to shop more, Christmas period, Thanksgiving. This year, apparently, a lot of shopping is done online. So we have what 10, 10, 9, 9, 11, 11, and next month we got 12, 12 lah, before the Christmas lah. So Nike tends to be doing okay lah towards the end of the year lah. Nike, Amazon, Walmart especially, they are all doing well. So I'm looking for a retest. If not, right, a deeper pullback like to this area that will give me more conviction. Like a price at 120 will be a much better buy than a price at 130. So this is how I identify the levels lah, and literally just wait law. Then if let's say trust up, how if let's say today one candle shoot all the way up, then you arrange you readjust your plan again lah, because we can plan, but there is no guarantee things always work according to plan. That's why you must have like plan A, plan B, plan C, then see which scenario works out. So as far as I'm concerned, this is what I'm looking at. Yeah. So this is for Nike.
Right. Okay, thank you for analyzing Nike. I think in view of time, let's go on with your presentation and sharing, and then later on at the end, we'll find a bit more time to finish off the other one or two counters that we see in the Q&A.
Okay, sure. So, guys, I know some of you are also asking some of the counters. Because of the time constraint, I'm not able to answer every single one of them. So, but of course, later on, as much as possible, I will want to answer the question. So, right now, now at least now, can I safely say that you now have a much better idea of how I deploy the trend lines, how I read the trend line, and how I apply the trend lines to tell me the turning points and come up with the scenario. So again, remember, it is always about the big picture. Number one, big picture first, then the key levels, identify which price point, which areas that you are looking at. Then after that, wait for a reaction, calculate how much you want to take, and then just take the trade. And in the event you're wrong, at least how much you have already calculated, what's your loss already. All right. So this is really just a synthesis of what we have gone through together in the last 1 hour. And this perspective, I believe, is very important. Okay. So right now, I also want to share with you the offer that I mentioned earlier. And this is a DIY, and I quote Richard on it. So it's like a do it yourself kind of direction. Okay. And this offer, right, it's the e-course that I have. So this e-course, right, it's called the TPB Swing Masterclass. And of course, today I shared with you parts of this my methodology. And because of the time constraint, I cannot be sharing everything here. Just expect 1.5 hours to finish everything lah. So everything, right, and this is something that I teach in my e-course. It is the TPB Swing Masterclass. So you can approach this at the link of, if you go to bit.ly/TPB Swing. So the offer today is actually half price off if you use this coupon code, all caps, all capital letter, caps, election. Okay, election. And now let me probably give me about 10 minutes to share with you roughly what this whole e-course is about. Okay, so I know traders, right, especially even myself initially, I always have this question at the start, like, hey, what if I buy this stock and then after it drop, some of us have got this experience, right? Wow, this one good price, I buy, and then after it drop already, especially those breakout traders, right? So what happens if it buys and drop? And if you are like entirely new to trading, what means like a right size for you to trade? Am I buying too much? Am I buying too little relative to my account size? And usually the most burning question in your mind would be, what price am I supposed to be getting at? So just now, right, I shared with you the discretionary way, the ways that I draw the trend line to identify which are the price point I want to enter, which are the price point I target for the exit. So that is a discretionary point of view. But in this TPB e-class, right, I'm going to share with you a more mechanical way that allows you to, make this decision a lot easier. And how do you project where the turning points are? And this is something that we have covered a little bit just now over the last 1.5 hours. Now, this whole TVB Swing Masterclass, right, it is a systematic, rule-based strategy. Systematic means, in just now what we have mentioned is all discretionary, right? Discretionary means it's like a form of art lah. So it means that your judgment may be different from mine. And then you'll be left scratching your head. What if I draw the line and then my angle is different from Jay's, right? So this is a form of art that we cannot unify everyone. But there is also another aspect, right, which is more science lah, okay, more logical. So this is what I mean by systematic and is rule based. That means it follows a specific set of rules to eliminate, right, all those question marks that you may have, and it helps you to identify, okay, should I be entering here? Why do I want to enter here? And things like that. So largely it is a trend. It is a trend following strategy. So generally, I like to follow the trend, and of course, recently it also the market, the Federal Reserve printing money, 3 trillion this year. It really just boosted up everything that makes trend following profitable in a very short period of time. And you can apply this to stocks of any country lah. But of course, for the back test, it is all done on US stocks, not on Singapore stocks. Quite sad to say, given that I'm a Singaporean, right? If you look at US, right, the growth of the US market, if you look at the last 30 years, is about 8% per annum. If you look at Singapore, the last 30 years, you're only looking at half. It's about 4% per annum. So it's quite sad because there is no money flowing into this region. Money is flowing in the US. So be it, government print money or what lah. So the money is definitely flowing there, boosting up all the asset prices over there. So this strategy, the TPB swing strategy that I have, can be used to apply to best applied to the US stocks lah. Okay, and it is a 100% online e-course, which means you can learn this at your own free time. So own time, own target, 24/7 access, meaning anytime you want, even at 5 a.m. in the morning, you want to access it, by all means lah. So you can learn it at anyone, as and when you want it, and you can repeat for as many times as you want. And here is the back-tested rule-based strategy that I mentioned. So allow me to zoom in this. So this is the backtest result based on SPY, okay, the S&P 500, over a course of 10 years, okay, over a course of 10 years, not just 1 year, 2 years. If I can get 167% in 1 year, 2 year, obviously, you all can leave the room now. I'm definitely a scam. Okay. So it's over time. I don't advocate get rich quick. So this is something that it can be added to your already, whatever strategy, the arsenal or strategy that you already know, enhances your perspective and your age. So divided by 10 years, right, the CAGR, the compounded annual growth, is about 12% or so. But if you take this linearly, so 167 divided by 10, that's about 16.7%. Okay. And transaction cost, you can see everything is included inside. Then the win rate is about 71% for the back test. But of course, win rate is not everything. As Richard mentioned time and time again, win rate is not everything. The expectancy is what that matters. Expectancy is what that matters. So later I will share with you something that is more relevant to the expectancy. All right. So in the back test, at least this is what I get. The win rate is about 71%, which is quite reasonable. Quite reasonable. So over here, this strategy, right, the swing strategies, I divide them into 2 groups. One is for a few days, one is for a few weeks. So the weekly swing, we can write this for months. We can write this even for years. Okay, so for the weekly swing. But for the daily swing, usually we go for days and weeks. Okay, we can go for days and weeks. So this is the kind of time frame of trade that you are looking at, and this complements you if you have a full-time job. And I know some of you with a full-time job, it's very taxing, especially recently, right? Wow, because of cost cutting, all your job scope all increase, right? But nothing else apart from the job scope increases, like your pay don't increase. So you are basically doing 1.5%'s job, right? But your pay still remain as your own pay. So if you are, having a full-time job, that's where maybe those shorter term trading like intraday trading is going to be very tough, because there is no time to go and stay up until like 12, 1, 2 a.m. Then after that, next morning you still have to appear for work. It's going to be very taxing. And if you have a full-time job, I think this strategy would suit you well, because I have got a few students. They are educators, they are teachers, MOE teachers. They have to be in school like 7 a.m. They only leave the school at about 4, 5 p.m. And then they still got family, they still got kids. So, and they are able to use this lah. So in a sense, it doesn't it doesn't require much screen time, but it of course does need you to spend some time, sit down to plan the trade lah, according to the trading plan that I prepared within the course itself. So if you are a beginner, like I don't know even what is stock. Today whatever you say like very cheap how. So in the course itself, I will start from the basics, and that's where even if you are a beginner, you can you will definitely be able to go from all the theory to practice lah. And I know a lot of you tonight, especially in OTCS, you are veteran traders, so you're all advanced traders. Does this strategy suit you? Well, like I mentioned, it adds to your arsenal of strategies. You already have something that is working. So you have something that is working, and this probably just enhances it. It's like another set of strategies. And I know some of you are also options trader, right? So options trader, there are a few kinds. One type of options trader, right? Because personally, I trade options as well. So if you are the options seller, okay, you're an option seller, then usually you'll be selling on an underlying, right? You'll be selling on underlying, which can be stocks or it can be futures. Okay, so if you're looking at futures, if you use this, then you can use it to analyze lah. But it's if let's say you are trading options as a tool, because options, right, at the end of the day, it's a tool. Whether is it stock or futures, this one is just like, a plate of rice or a bowl of noodle. Then I have the tool. Whether is it chopstick, whether is it fork, then I use it to eat lah. So in this sense, if you're trading stocks, well, and you're options trader that are doing options trading on stocks, this can be something that is suitable as well, because I will share with you where to find all the stocks that I'm looking at with the momentum, so you can pair it together with the existing option strategy that are directional. It can even be like a lead call, straight out, buy call, or you can even use a put spread, or things like that. So provided you're already trading options, okay. So these are various tools you can apply onto the course itself, onto the dish itself, which is stocks law. So this will be suitable for you, regardless whether you are, a brand new beginner, or if you are a advanced trader, all right. And an overview of all the modules, you can see it really starts from the basics, and then it brings you through the technical analysis framework. Just now I shared part of it, of the TA over here, and here is how you find all your stocks. The big picture, you find all the stocks, and the swing strategy itself, the part about expectancy and your sizing is covered over here. How do you choose a good company using the checklist, and then finally taking action? So this is what is covered in this e-course itself, that spans over 5.5 hours, okay, of curated contents. So this is really your own learning pace. And what comes with this e-course, number one, we have the trade alerts. Every single week, my coaches and myself, we will post the candidates, okay. And I kid you not, there are also some traders, right, who they want to do their own stuff lah. So they are just in here, right, every single week to get our list. Okay, they are just in here every single week to look at our list of stocks. And then we have a community Telegram channel, and I will run the Facebook Live quite frequently in the graduates group also. So this graduates Facebook group, you'll be added to that. Trading plan template, it helps you to systematically or step by step key in the necessary requirement. Then you can know at least where's your entry price, where's your stop loss price, what are you going to do with it lah. So everything is more systematic lah. How do you manage the trade, and so on and so forth lah. Okay, so Also, let me share with you more about the weekly trade alerts that has been ongoing. So if you look at this Excel sheet over here, right, this I extracted this list, right, from every single week we will share. So I only started producing, or rather this I only started selling this e-course since the starting of this year, where the COVID hit. Then we provide this so-called the fish to the students. So you can see this one starts from week 19. So even okay, this is not a result of the trade that we have taken based on the rules. This is just to share with you the strength of the candidates, okay, the quality of the candidates, the stock candidates that we have selected. Because even if we just use a time entry, like for example, I select this on a weekend, right? Then straight away during the Monday you open, you straight away buy. Then after that, you look at the price where it goes in 2 weeks or 3 weeks later. Okay. So this is the candidate on week 19. In 2 weeks later, up 6%, 3 weeks later, up 7%. So are there any misses? Obviously, there are some misses, like you can see CNC -5, -2 in 2 to 3 weeks time. So this is to really show you, right, the strength of the candidates that we have selected every single week. Because it is not just important, right, to know how to trade. That's the strategy portion. But how to apply the strategy on the right market, the right stocks. I think you will agree that this is important as well. So it is on these stocks, right, so-called the strong stocks, okay, the strong stocks that we apply the strategy that gives us a good result. So let me scroll down. You can see week after week, right? Some of the counters you may you may be familiar with, like Intel. You can see profits in 2 weeks, 3 weeks. XLC this time is the communications ETF, the basic material ETF. So it's a combination of ETF and individual stock. So this one is Square, Lowe's. So you can see how they have performed. Some of the weeks are very good, and you can see Lowe's has just went on and on, to make a very good trend. So Take-Two, Activision, all this, even Garmin, Microsoft, and then from July onwards, we increased the number of candidates because there were simply so many. There were simply so many to be looking at. Of course, Pinterest, this one is a little outlier because it really just fly lah. So it really just fly, and then it cancels out with this. Then Etsy was a very, very strong stock that we have traded this year. PayPal, all of this. So let me just scroll down. You can see over here the profit in 2 weeks and 3 weeks. Obviously, green color means it's positive percentage. Then red color means it's negative percentage. So we have been providing this list every single week. And this is something that you'll be getting as part of the students, the graduate student. So of course, you can see the market just tank, right? It will come down a bit, okay? So that's where the position sizing, your risk factor will come in. I mean, for you guys that have traded for so long, right, you will know parts and definitely one. I mean, the Chinese got a saying 上山的多总有一天终遇虎啦，就是说meaning if you go up the mountain a lot, right, definitely 1 or 2 times you will see the tiger lah, okay, put it crudely lah. So in this sense, here is where the tiger comes out. So here Texas Instruments, so on and so forth lah. So let me just scroll through. You can see this is as of 30th October. So some of the stocks that we have selected are really, really flying in that sense, giving us a very huge boost. So let me share with you about the expectancy if we were to break down. So even we just look at this, right, what is the win rate? I know win rate is not everything, okay, but obviously the hit and misses, it must be reasonable. So real world efficiency versus the back test is about 70%. So real world efficiency, if we look at the right candidates, right, we are looking at about 61%. So I think it's quite close. And if you look at the expectancy, average win versus average loss, it is still positive. Okay, it is still positive. So average win more than average loss. So this risk to reward is positive. If you look at the 3 weeks, right, risk to reward 9% versus -8%. So it's still positive. So you coupled it together with a win rate of 61%. the expectancy is definitely positive lah. So I think this has a more direct implication on your P&L rather than just a win rate lah. Because win rate is, I know some traders, you got 90% win rate, but the 10% blow up the whole account, also no use ma, right? So this is where we break down this, and you can see it is quite okay lah. It's not going to make you rich overnight, but like I said, it is going to enhance whatever that you're already doing. And if you have some idea on different instruments that you want to trade, you can make use of all these candidates lah, and apply the strategy to enhance your edge and your returns lah from the market. Okay, so this is the list of the results itself. So yeah, this is what you will get. And here is, check out what some of the students who have bought this program, what they say lah. So this is Mark. He say, he bought the course and he shared it with his mom lah. So the mom finished the course, and then the content delivery was super clear. So at least I find that if you want to learn something, the thing must make sense and easy to digest lah. Okay, so even you got a damn nice plate of food to eat, right? And I ask you to finish in one mouth, right? You also cannot finish ma. So all the content is all curated to deliver in bite sizes lah. So it's easier for you to digest, easier for you to understand lor. So you can see Sarah onto module 3. Thank you for quality content. Here are some of the other students with the results. You can see after they apply the strategy, like you can see Ray is from US. He's from US. So Kacheng TP today on, I think on, if I'm not wrong, is on Walmart or something. So this is Peter, retired army officer. So blah blah blah. So these are just what some of the students are saying about the course. And now I think this is the most interesting thing. Is this young man a scam? Because I know a lot of you may thinking, hey, you younger than my son. Why should I believe you? Who are you? You know, first time that, especially it's first time that if you hear me before lah. So especially this is the first time. So this student, right, Heng. So Heng, he went on Seedly. I think most of you should be quite familiar with Seedly. So he went on to Seedly. He asked has anybody tried the courses by me? Any reviews? So this guy, right? He said, I didn't attend the course. So Ryzen 16, he said, I didn't attend his course, but I am skeptical because he sounded scammy. So I was actually quite sad lah, because in a sense, most of my sharing, if you are connected with me on Facebook, you will know from time to time I do Facebook Live, right? I really just do live sharing, and I don't hold back. I just say what I see lah. Okay, so I was quite sad because it sounded scammy. I'm like, okay lor. So okay, long story short, what happened was, this same guy, Heng, so I snapshot this lah. I posted in the public Facebook group that I host. Then this same guy, Heng, he replied lah. So you can see the name is over here. So Heng, he replied, say he posted the question in hopes that, you have some reviews. But after watching the interviews I was in, so I was featured in a few interviews together with Karen Fu, Philip Teo of Trader Wave, Online Trading Summit, things like that. So it was enough to convince that I would legit join and never look back since. So I said, okay lah, at least this is the greatest testament lah. So if you want to believe that I'm a scam, then nothing I can do lah. Hopefully these 2 hours, thank you for spending your time with me, and I've created some value for you lor. If you really find that whatever I share is a scam lah. Okay, so to end things off, right? To end things off, how much is it going? What are you getting? Let me do a summarize for you. The e-course itself, okay, the e-course, your own time, own target learning, okay, the e-course itself. Every single week, we will have the trade list, and then the booster webinar in form of Facebook Live will be happening in the graduates group, community Telegram channel. All the value zone indicator, the trading plan templates, everything will be given to you. And obviously, I'm not asking for recurring payment, and it's just a one-time payment, which I think many of you, if you have attended many of the commercial programs, I think you pay way more than this lah. So today, in conjunction with OTCS and Richard, we decided to run a 50% off. So literally, you take 599 Singapore dollars divided by 2. If you use this election code, and you can do so or sign up at the current link lah. So bit.ly bit.ly/TPB swing. Okay, so this is the offer that we have prepared for all of you, and hopefully you find value in what I shared with you tonight. And I look forward to having you on board as one of my students lah. Okay, so once again, thank you very much, everyone. Yeah. So Richard.
Yes, thanks a lot, Jay, for your sharing and also of this offer. Just want to say that actually the price is minus 50% off, but this price will not last forever. How long is this 50% discount valid for?
This is valid until Sunday. So until this Sunday.
Okay, so until this Sunday will be 50% off. And actually, Jay was running this promotion because he was doing a favor to build up the student group that he's building up for the course, and he is going to increase price already. But I told him, please hold back at least until for our webinar. Then after that, you increase price, never mind. But at least for this webinar, must hold the price for us. For a few number of days, so that for those people who who come in late, who want to watch again and reconsider everything, they can do so before they make a decision whether they want to come on board or not, or to take this offer. So this 50% off is until this coming Sunday, is it, Jay?
Yes, this coming Sunday.
Okay. So what will happen after Sunday? Will this code
the code will will expire on this Sunday, then the price will go back to the normal price lah.
Right. Okay. So please do your own due diligence for those who are attending, and this is your DIY way to create your own wealth, where you can learn from someone who has been there and done that. There's no need to pay tuition fee to the market, and then for this one time. So Jay, you're saying that this price is one time, and then your support is for how long?
Sorry, the support for as long as I live lah. So
Yeah, 32, 33. Okay,
yes,
I think
I'm 33.
can take a bet. So you're doing this for one time payment for lifetime, and then every week you'll produce that list.
Yes, every week we will send to a list either Saturday or Sunday when the market is closed.
Okay. So for those people who wants to know how to come up with the list themselves, is covered in one of the modules, is it?
Yes. So we are one of the modules I will share with them. How do I break down the systematically from the market, right? How many stocks? The whole market. If you consider all of the stocks, there's about 8,000 of them. Then how do I break down to this handful of them, lah? Yeah.
I see. So for those who wants to really DIY, the method that Jay used to come up with the list is provided inside one of the module in the course. And then for those who are busy or lazy, just see what is the list and take the action from there, correct or not?
Yeah. Yes, more or less.
Right. So there's also a question about the exit. So let's say you just now doing the Excel sheet that you show the entry on the Monday, and then you just take exit at 2 to 3 weeks later. So for people who go through the course, what would they do to manage the trade? So let's say they on the weekend they get the candidates. So what do they do on Monday? And then after they enter, when will they exit?
Okay, so like I mentioned, the course is more mechanical. I structured it more mechanical in the sense there is an exact entry price based on the indicator that is that's provided, that's proprietary. So there's a entry price over there, and then there will be specific price targets for you to exit. And in the course itself, I also mentioned how do they manage the trade when it hits a target? If you don't want to get out, what can you do so that you can continue to ride the trend? So the entry, the exit, the sizing, everything is mechanical, explained in detail within the course itself.
I see. Okay, I hope that answers the question of one of the attendee about when does J exit. So it's taught inside the course and it's mechanical. So you also provide a trade planning kind of Excel, is it?
Yes. So there will be a trading plan template embedded in the course. So when you reach that chapter already, there's a download link, say download trading plan here. Then you will follow and go through the trade together, lor.
I see. Okay. So what kind of account size would you say is needed to follow your system?
Okay, because we are looking at US stocks, right? And understandably, right now US stocks they are quite high price lah as compared to Singapore stock market. So at least I would say $3,000 to $5,000 if you are using leverage instruments such as CFDs to trade the underlying stock. If you are using options, then that means you already know how to use it already. Then obviously whatever account that you're using lah. But if you are like purely starting out with a leverage account size, we using some form of leverage, like using CFD as an instrument, right? 3 to 5,000, I think that's reasonable. But if you are not using leverage, if you are using cash, like if you still use like Poems, Philips, this kind, you want to buy and hold the stock itself, then of course your account needs to be bigger, preferably a 5 figure, because all stocks are very expensive right now.
Right. And of course, a person don't have to take all the trades lah. They can choose those more low price stocks and buy lah. That's another way, right?
Yes.
Okay. Let me see what other question I have here about the course. Um, Lee is asking, is the proprietary indicator and template also lifetime?
Yes, of course. Once you have the access to it, right? I will give you the link. One is tagged to your account. By the way, I'm using TradingView, so it's a free account. Then once it's tagged to your account, you have access to it, lah. So all these are lifetime. I don't. It's a lot of business friend. They say, why are you doing all this? Like waste time, waste money. To me, is I mean honestly, I don't mind sharing. To me, it's a side income. So and I know I'm not looking to like make a lot of money from the courses, because then I would not sell at this price lah, and then provide all the lifetime this and that. A lot of all the commercial programs that I believe some of you have gone to are okay. Every year you subscribe this, subscribe that. Then personally I don't like it, and I'm just doing it as a this is really like a side income lah.
Right. Okay. Thank you so much for that. And Isa is saying, "Oh, Jay is so generous. God bless you."
Thank you.
Thanks, Isa. Yeah. Chris is asking, your offer is very attractive. In the event that I have queries, so let's say they sit for the course, they go through the course, and they have questions. Where would they ask those questions?
So the first thing that they will do when they enroll, right, there will be a link for them to apply to the students, the graduates Facebook group. So all the questions, including their trading plan, the snapshot of their screen, everything is posted onto the group itself. So this is where I will answer, either myself or my coaches. We will respond and answer the questions accordingly. So there is a support structure in place. It's not like, I want to find him, how to find, and cannot find already. All will be done in the graduates Facebook group.
Right. Okay, cool. So if you have any more questions about Jay's course, please feel free to post them in the chat somewhere on your screen. If you're on the computer, the chat box should be on the bottom right. And if you're on mobile devices, you will have to swipe up or down to look for the chat box. Okay. So for those who are watching on YouTube Live, if you want to ask questions, please come inside the room to ask Jay. Okay. So let me see what other questions there is. Okay, proprietary indicator. Okay, I think that's all for the course at the moment. So this offer is good for until this coming Sunday. So if you are interested to get it at a great value that we have secured for all the attendees today, so please go for it. Okay, go to the link that you see on the screen right now, and make sure you type in the coupon code or the promo code called election. Election spelled in capital letters and spelled correctly, please. So make sure that the price you're paying is 299.50 Sing dollar. Otherwise, if you pay 599, then I think you got to resolve it with Jay directly already. Also, this is the deal that we have secured with Jay for all of you. So with that, I think we can move back onto the candidates. We do about maybe 3 more that I see up there that are being commonly asked. I see John and Michael asking about Baba, So and then we will probably analyze the last few trades, and then we will call it a night, because we have already overrun the webinar by 15 minutes. So I think the last 2 or 3 candidates that we'll analyze, each one maybe 2 minutes, we'll probably be able to finish off the session nicely before the US market opens at 10:30 Singapore time. Okay, so if you have any more questions, we'll take one or two last questions at the end of Jay's analysis of 3 more stocks.
Okay. Now, let me see. Any more questions? Well, so Chris is saying how big is the group? It's about 200 or so, slightly less than 200 or slightly over 200. So that's how big the group is. Okay. So on this part, right? Remember, guys, to apply so what you are seeing here is the checkout screen. So the caps, right? So remember, it's election. Okay, ELECTION. Fully caps election. Then make sure to apply this button. So once you click, then you will see the price will be applied. It will be different, because if the price doesn't change, you key in everything else and then you submit payment. Then you will have to contact me separately to arrange for So let's remember to apply this discount code. Okay, so this is in the event you are checking out. Okay, so this is for the thing itself. Okay, now let's go back to the few questions. A few questions. The Baba. Okay, since Baba, I think a lot of people looking at, right. Wow, this one. Ever since the Ant Financial IPO got halted, like dead in the track, right? Then gone already. Straight away, whatever that you look at now is just all the way down. So Baba, the earnings. Let me see. This is the earnings. Earnings was a negative surprise as well. Then prices seems to be coming down. Now, where are the key levels that I'm looking at? Let me look at Alibaba. So if I were to pull up a little bit, okay, this one is down there. Over here, like this. Okay, so right now the pricing is the prices are dropping. I will be looking at somewhere around this area, which means that for Alibaba, if now it continue to drop again, this is like a falling knife. This is like a falling knife. So I never like to catch the falling knife. It's just like if people throw something at you, right? You don't say, hey, come, stab me. You faster get out of the way first, right? So this is where the key horizontal level should be around here. So I will be looking at this range itself. Albeit this is a larger range. Over here you can see right now is at 259. So if it comes back down to slightly lower, about 250, okay, somewhere around this 250 zone. So this whole zone, if it can come back down here, consolidate, and then I would then consider, taking it forward. Because previously, if we look at 2020, after that V-shaped recovery, after it broke the new time, this was the new area. Okay, this is like the new base camp. Okay, this is like the new base camp before they embark on this uptrend. So now that it returns back to this area, the price is about 250. I will be looking at how prices react here. Should the prices react favorably down over in this zone, then there is a chance that it might rebound. Okay, there's a chance it might rebound. Then again, it might go into a large, this kind of pattern moving forward. Okay, so this is on Alibaba. Okay, this is on Alibaba. If it comes down to here, I'm not going to get in now. This is a little too still dropping so don't. Okay, so this is on Baba. Richard, which one shall we do next?
Okay, I'm looking at the list and I see someone interested in Caterpillar.
Caterpillar. I like this. This is very strong. Has been very, very strong. So personally, I'm looking at these two. Caterpillar as well as over here, which is the DE. So I believe somebody asked DE as well. So they belong to the same industry. In terms of the price action. Both are similar, but DE seems to be stronger. Okay, these are the rotating income companies lah. So both part of industrial. All right. So for Caterpillar, what I would do is currently you can see that there is a nice breakout. There is a nice breakout, and then over here you break out already. You can see this is what happened. Then it broke out, and then now come back to a retest. It goes up again. But yesterday high volume, so you open here, sell down over to here. Optimism unable to continue. So I'm expecting, right, maybe not one line up. I would want to see more consolidation around this area first, which means the price I'm looking at is about 173, somewhere there. So I want to see the consolidation happening first before the thing launches itself forward lah. Okay, so Caterpillar. So this is Caterpillar, and the other competitor I'm looking at. This is more promising. Okay, Deere & Co is more promising. Over here. So again, right, you can see if we change to a weekly chart, right, you can see that it is very clear. It has been like sideways from 2011 to 2016, then rallied when Donald Trump came on 2018 to 2020, sideways, crash, and after that now rally back, like crazy rally back. So this is what happens. And if I were to use trend line, I think unable to project much because of the parabolic trend. So it is suitable to take short-term swing trade, not the long-term kind of swing lah. Because right now I think it's a little. You want to ride it like wow super long. I think a bit hard lah. Okay, so I think this angle again, if I were to pull up more or less, you can see it meets the top here, and here. So does it project anything upwards there? Don't have lah. Okay, so what we're gonna do is change it to daily. If we are looking at daily itself, right, a shorter trend, it would be like this. Okay, so let me change this color. You can see that over here, right now the market, it seems to be going. If let's say along what kind of lines are we looking to buy when it comes down, if it comes back down to this area, the next one should be about 240 which coincided this retest of the it has not retest the structure yet so waiting for the retest of this structure about 240. But one thing to note, it's very near earnings so earnings is coming on. I always make a habit to check when earnings is, because earnings may cause adverse gap. Case in point, myself, Google 2013, I got burned so badly over earnings. So now every time I do a equity trade, a stock trade, I will watch the earnings. So this is something that you should be paying attention as well. Okay, so
Right.
this is for Deere & Co and as well as Caterpillar.
Cool. You give a bonus there. Okay.
Yes.
Yeah. Okay. So Jack is asking about Square.
Square. So Square, payment system, single-handedly brought up the whole ETF. So I was looking at this ETF, iPay. So iPay was a solid ETF. iPay and iBuy these two ETF I invested for the long term. I invested in. So Square single-handedly brought up iPay. And looking at this, right? Can I look at like 2016 to 17? Cannot really look at that. But one thing I want to bring to your attention is this. If you look at the parabolic movement, right, from 2016, 17 to 18, right, this is also to reinforce what we have done, talk about just now. So you can see this is one angle, and then we have another angle like this. And then finally, the last part, you can see that this one is really just gone crazy, you see. So this is like 4 degree, then to 28 degree, then to 63 degree. Then after that, then go into abyss, the point of no return. Then shake out everyone before it returns, okay, before it comes back up. So going by this trend, will I hold Square for long term? Personally, I won't because it's a little crazy far but will I trade it for short term? Yes. So this is one of the strong stocks that we have discussed about, my students and myself. We have been looking at this. So currently it's actually at a very good price point in a sense. If you look at the trend, it respects this trend angle quite nicely. You see over here, rejected, rejected, rejected. Then here supported, supported. Then multiple times lah, support, 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 support. Then here pierces through, right? Then here now, right now is supporting. So it is at a very nice price point right now. Still have not fly that much away at 180. So what we can do is, if it comes back down, if it ever does. Okay, so over here, now let me zoom this in. So this is the daily chart. So 180, this is where it closed. Today, this is where it's going to open. So let's see where it goes. Usually when I'm met with this kind of situation, right, it's like, oh, seems to be not bad, huh? Then what I do, I will look to, okay, speculate a little bit. So this one purely discretionary, okay, purely discretionary. If I speculate a little bit, right, I will vary the sizing here a little bit. I will not go in with 100% of my intended size, because it is not at the price point that I want to. So, but I think it is quite close to where I want it to be. So in the event that this thing just shoot up like that, right? So what I will do is I will go in with a percentage lah of the intended size that I intend to go in with. Usually it's about a quarter or 30%. Then so even if it comes back down later, it's not so painful because my size is of a smaller size lah. Okay, if it really comes back into this zone for square, if it really comes back down to this zone, which is around $170 plus minus lah, then it will make it really attractive for a short-term swing for me. So this is what I will be waiting for lah for square.
Right. Thank you, Jay. Okay, one last one that John is asking, and this is a Singapore company. So I think I'm also curious about your analysis of it, and that is SE.
SE, C, Shopee. This is one of the very heavily sentiment driven stock. C Limited is driven by two business division. One is Garena, one is Shopee. Shopee is bleeding money. Garena is the one that is the cash cow. So fundamentally, don't ask me, not looking so wow lah. But technically strong. Is it strong? Yes. And if I were to look at the levels, I think it respects the prices pretty well. So if I were to look at this, let me see. If I were to zoom out, previously just gone crazy this year. So you can see it's a tight channel. And okay, so on the daily, what is likely going to happen is, let me double check this line first. This seems pretty reasonable. Okay, so this seems pretty reasonable. All right, so for C Limited, again, the zone, right, that makes it attractive for a swing. But then again, I am wary because you can see the cluster of higher volume, in this area. So this 1, 2, 3, 4, 5. So this 5, the cluster is very high. Earnings is on, like, when, let me see. Earnings is 17 November. So it should be tonight, after market close. So later at 5 a.m. lah. So it should be tonight after market close. So estimate to minus 55 cents. So should you be getting in tonight? Again, highly sentiment driven stocks, earnings tonight. There are better things to do lah. So wait for the price lah. So two things may happen tomorrow. Or rather 3 things. One is nothing happens. The other one is gap up. Then the other one is gap down. So if you are like, if you never buy, then you see tomorrow gap up, you're like, wow, piang. Then if you buy already, gap down, then you will say what? Wow, sian. Then if you lucky, you never buy, you stay on the sideline, then we are wow, heng, never buy. You know, correct or not? So it's very sentiment driven. Though I don't like to take a trade over earnings. It's like flipping coin like that, or big or small. So again, I will be looking at the price. The prices that makes it attractive technically for me, it will be somewhere again about 170 area. I think if it can do this, it will be attractive. Target wise, if I superimpose this, target wise, near term target, I think we can be looking at even this. Okay, but of course, everything pending the whole earnings. I think that's important. Earnings is important. Yeah,
right. Okay. Thanks a lot, Jay, for covering this extra bonus analysis. And maybe we'll just like to, you would want to just flash that screen where you have your offer. And while we take one or two last questions for the last 2 minutes of this webinar.
Yeah, sure. So this is the promo code. Remember to apply the promo code in order for you to enjoy the special discount this time.
Okay, wonderful. So this offer will last until Sunday. So if you want to catch the offer before the price goes up, please go ahead to sign up for Jay's course, online course that you can take any number of times at your own time, own target. Okay, I think Zach X is asking here. He or she says that he have tried 2 cards but kept saying card declined. So what should he or she?
What should he or she do? Okay. Don't mind. I leave my email here. Don't mind. Drop me an email. Let me get my team to follow up with you. So this is my email at swimtrading.com. Okay. So j@swimtrading.com. Do drop me an email over here. Then I will resolve that for you, because chances are is not the problem with my site. It should be the payment gateway, because I am using the Stripe as the payment gateway.
Right. Okay, cool. So I think that will be all for now. It's already 10:30. US market is open. I think many of the attendees are also trading the US market. So any last words, Jay, for our attendees?
I mean, just look forward to seeing you on board the swim trading community, and thank you for inviting me on board tonight for the OTC at this OTCS webinar. And it has been my pleasure to share with all of you what I know, and hopefully it helps to sharpen your edge and enhances your your trading results moving forward. Yeah. So once again, thank you, Richard. Thank you, OTCS.
Thank you, Jay. Thanks for your sharing as well and keeping this 50% off offer for us until this Sunday. So everyone, a very thank you for attending this webinar as well, and I'll see you the next time. Okay, so take care. Bye-bye.
Bye.